Welcome to Markets Now. I'm Michelle Rook with Allison Thompson with the Money Farm, and we're seeing grains mostly higher, though we're off of session highs in the row crops. In the livestock futures, we're trending mostly lower there. And Allison, let's talk about soybeans. We had some double-digit gains early on, but we have come off of those highs. Is it because meal's down, or did we just run up into some chart resistance? What's going on?
Honestly, it's a little bit of both, but honestly, both markets did hit resistance levels early this morning, especially for soybeans. That $13.90 to $14 mark continues to be a really strong point of resistance for the January contract. We did see March go past 14, which was good to see, but the continued strength just wasn't there. We weren't able to see any new buying enter the market, and it did sell off. And again, we're dealing with a short week here, so it's not surprising to see some profit taking ahead of the holiday, especially given such a strong rally on some weather. So we are near the bottom of our day trading range here, midday, but we are looking at some pretty oversold charts here. So it wouldn't be surprising to see a bit of a rally back here because nothing has really changed. We didn't get any demand news, unfortunately, today to help us out, but we are still looking at weather forecasts that are largely unchanged, scattered rains through some pretty dry areas of South America at best. And that's definitely keeping the market supported. So there just may be a bit of risk off here going on ahead, going into that Thanksgiving holiday, because we know forecasts are always subject to change. So a bit of a risk off mode isn't surprising to see hit and miss throughout the sessions here when we're dealing with a lot of volatility during a holiday week, right? A lot of thinner traders are on holiday. So we can see some pretty big movements in a day.
You know, those forecast models looked like there were some pretty good rain chances for a lot of Brazil. So if they do not get these rains that were predicted, come Sunday night, do you think we could really be off to the races here and get past that $14 mark on beans?
Yeah, it's definitely possible. Their nick of time window is definitely running out. Arguably, I have talked with a few contacts in Brazil. They could go into next week yet, possibly, and still plant. From what I've been hearing, though, a lot of guys have stopped planting down there, and they're just holding tight and hoping for some rain. So they're going to have some tough decisions to make here in the next couple of weeks, regardless. Even if they get the rain, is it going to push into their second crop corn? Are they going to take the risk and just plant it anyway? It's a lot of unknowns here that the market's trying to sort out, and no one really knows the answer. I don't think the producers there even know their answer yet. So, but obviously that time frame of getting the crop planted to plant that second crop corn is dwindling. So the next couple of weeks here are very key, but if patterns aren't holding, it's hard to justify that we could actually see them happen. And that's what the market isn't buying. And that's what we're buying today. So just less confidence in these weather models showing rains.
Yeah, and the corn market has been a reluctant follower of soybeans. We haven't put in the South American weather or the Brazilian premium there. That's a waiting game, or we'll see that maybe a little later on, you think?
Yeah, I think corn's just playing a waiting game here too, just because they don't know how it's all going to pan out yet. We're still a good month, 2 months away from a lot of that second crop corn even going in the ground. So it's really hard to justify a large rally at this point, this early. They're not buying the rumors quite yet, but we are obviously a couple weeks away from that. If it continues to be dry and hot for the month of December, it's obviously going to play into that planting period. And it pushes the crop into their dry season. And that's during some pretty key reproductive stages for corn, which could be very detrimental to the crop. And I've heard some arguments being made about, they had such a good crop last year, maybe they don't need to worry so much about this year's production, but that's not necessarily the case. They are looking to higher corn ending stocks from last year. But honestly, it's still going to be pretty tight because they've been exporting a massive amount of corn on the global market. So they're actually looking at about 10 million metric tons of ending stocks. And just for comparison, last year, 22-23, the U.S. was sitting about 35 million metric tons. And we thought that was tight and kept our prices supported. And they're the world's number one exporter of corn. So when you're looking at tight ending stocks, a third of what we were last year, it definitely questions whether they can hold that title if they do see some production issues here this year.
Yeah. The export business that we have seen here lately, we didn't get a flash sale today, but Mexico bought yesterday. It's just not been enough to move the market. We need some bigger action.
Absolutely, we do. It would be really good to see. Mexico has become a routine buyer. The market expects them to be buying a decent amount each week at this point. The failure of getting any of these big China sales has really been hurting the market.
Mm.
I would hope that we would see some here sooner than later, but we know they're shrewd buyers, so they're going to try and get their supplies as cheap as they can. And right now, they're waiting for South America to give some indication of what their production is going to be. We've heard a lot of lower crop estimates from private analysts already. But again, until we see some buying action, it's just going to be hard to really move our markets. And I think Brazil's in the same point too for farmers selling. They're not willing to make any sales yet either. So it's just a wait and see game at this point.
Yeah. And the wheat market, as we speak, is starting to make a little bit of a move to the plus side here. We just seeing short covering correcting the oversold status, or is there something else going on?
I hope so, that there's something else going on in wheat. But as of right now, I don't know of anything that's really going on. But we do know that the funds have lightened their short position here last week on Minneapolis wheat, still sitting on a very large net short position, but they are starting to lighten it. So it'll be very interesting to watch here in the weeks ahead to confirm whether we're seeing some moves. But if they are, it should ultimately result in some type of a rally. But historically, we do see a decent rally when they do start to get out. So the question is when and what's going to spook them to do it. Well, the Southern Hemisphere is obviously having some issues with their production this year and weather issues. And they're actually just starting their wheat harvest now in November, and that'll run through January. So we should be starting to see some production results hit the market here in the next month, I would guess in December. And if that's enough to spook the market, and we're looking at production numbers that are a lot lower than what the USDA currently has estimated, it definitely could be the spark that gets the funds off the move. So going into the new year, I still remain pretty bullish wheat.
The only, I guess, offshoot of that is that if you start taking prices higher, do we become uncompetitive with Russia, especially?
That's a good point. But we also have to look at their supplies too. They're actually going into winter as well, and I've heard some reports that they're actually concerned about their export pace is actually slowing going forward. So we'll have to keep an eye on it. Obviously, we're all susceptible to outside market movement and what our financials do. But as of right now, we are becoming a little bit more competitive on the global scale for wheat. We're definitely doing better than Australia and Argentina because they know they're having production issues there. So we are a bit more competitive with the EU, but Russia's ultimately still that number one buyer, but they can only supply the world with wheat, cheap wheat, for so long. So hopefully the US can get in there and we can get some business here going into the beginning of the year, especially for high protein wheat. It seems to be we're definitely in the market for that, and we're seeing some good movement.
Definitely. And if the dollar, which has started to ease off of its highs here, keeps falling, that would help too.
Oh, absolutely it would. But it's kind of funny. We're not seeing those markets necessarily correspond how they normally would. So I highly doubt that that is broken. I have a feeling we're going to play catch up here eventually.
Cattle market, we had a little bit better opening, but was quickly sold here just like yesterday by the funds. Are they going to keep liquidating on strength, do you think?
I believe that they probably will. The cattle on feed report was better than what the trade was expecting, but by no means an extremely bullish report. We're still looking at some decent supplies out there. So I have a feeling that it is going to keep the market pressured here going forward. And especially when we're looking at outside markets being pressured lower as well, it's just a battle that they're going to be up against for a while to see some continued strength. And normally after Thanksgiving, we do see some strength come back into the cattle markets and livestock markets in general. So hopefully we'll see that bump as we enter the month of December.
Thanks for joining us, Allison Thompson with the Money Farm. That's Markets Now.